Hi everyone, Mathis Connor here with Connor Management Group, and this week we're going to look at the best transportation stock to buy right now, and today is Thursday, January 16th, 2014. All right, from this slide, what you can tell is that the industry is regional airlines, and we see this name as having an upside potential of 18.8%. From the next slide, you see that the name is not all that unfamiliar. It's JetBlue Airways. The ticker symbol is JBLU. Once again, we see this has an upside potential of 18.8% over the next 12 months. Business summary. JetBlue Airways Corporation's a passenger airline company, provides air transportation services. The company also provides in-flight entertainment for commercial aircraft, including live in-seat satellite television and a number of other communication related services. Another description I have is JetBlue Airways is a passenger airline. It primarily uses a point-to-point route system as opposed to the more common hub and spoke model. They serve about 75 destinations in 23 states. Puerto Rico, Mexico, the Caribbean, and Latin America. The focus is on underserved markets and metropolitan areas with high average fares. Major bases are New York JFK and Boston Logan. So that paints a little more color on their business operations. Their website is www.jetblue.com. The company's headquarters is in Queens, New York. They were founded in 1998. The number of employees they have is 12,124. Once again, ticker symbol is JBLU. The super sector is transportation. The sector itself is services, and its industry that JetBlue falls in is, of course, regional airlines. JetBlue's annual revenues over the last 12 months totaled $5.27 billion. Their net income is $122 million. That sounds a little small against that size revenue. And the cash from operations, however, is at $722 million. The market capitalization for JetBlue stands at $2.54 billion. Onto their products and services page. We have some pictures from the JetBlue website. We've got their logo, JetBlue Airlines. We have a picture of one of their jets in front of a JetBlue hangar. We've got a map showing their major destinations, and it's clear that their primary hub is out of New York, but it looks like they have secondary hubs out of Boston, Fort Lauderdale, Long Beach, California, as well as Oakland, California. We also have a picture of JetBlue airline taking off and a picture out of the window overlooking an engine and some, I guess, some low snowy capped mountains. So that's what we have on their products and services page, just a picture of the jets and their routes. On to some of JetBlue's key metrics. Once again, annual revenues at $5.27 billion, net income $122 million, and cash from operations $722 million. The operating margins fairly flat. For 2012, the operating margins were at 12.7%, and for 2013, they're tracking to be 13%, just ever so slightly better. Onto their valuation metrics. JetBlue's trailing PE ratio right now is at 23.4, and its forward PE ratio is at 13.4. So that's some healthy expansion of earnings is expected. The PEG ratio is at 0.8. Anything below 1 is usually considered to be somewhat of a bargain, that's for sure. The price to sales ratio is at 0.5. It's also low, but I also know that's not unusual for a company in the transportation sector to have a low price to sales. The price to book, well, reasonable. That's at 1.3. and the enterprise value to EBITDA is at 6.9. So overall, we have what I'd say to be some low side valuation metrics. I mean, the 23.4. Maybe you could argue that's a bit rich right now, but it's expected to come down quite a bit. And the other valuation metrics, which we just talked about, are definitely in that on that low side, low range. And that's the kind of thing that would make you wonder, oh, is this a good value stock? Something I should take a closer look at. So the recent closing price for JetBlue yesterday was $8.98. The 52-week low was $5.70, and the 52-week high was $9.22. So right now, JetBlue is trading closer to its 52-week high than its low, that's for sure. And the 20-day moving average for JetBlue stands at $8.71. The 50-day moving average, $8.55, and the 200-day moving average is $7.08. So that relationship tells you right there that the stock price has been on a somewhat steady increase. The average volume for JetBlue, daily traded volume, is at 6.4 million shares a day. So the stock is definitely heavily traded, that's for sure. The beta is at 0.6, so it is less volatile than the broad stock market in general. And the dividend yield is at 0%, and the average dividend payout ratio is at 0%. So JetBlue doesn't pay any dividends. On to the next slide, we're taking a look at JetBlue's chart over the past year. And what we see is back around the end of February, the stock price was just, a little over $6, around $6. And then it meandered, it jumped up to $7 a month later, and then down to around $6 again in July. And then from July, the stock increased somewhat steadily up until around, mid-November, where it jumped up to almost $9, about $9, and then pulled back maybe 50 cents in early December. And right now it's at about $8.98, about $9 right now. So the stock has increased over the past year. So coming to our assessment about the financial statement quality of JetBlue, I'll have to admit their financial statement quality is fair. I tend to like to choose stocks that have pretty solid financial statements, a moat in case of some unforeseen circumstances. But airlines, they're not known for having the strongest financial statements in general. And once again, this is the strongest transportation stock that we see right now. So although the financial statements are fair, and in general, a lot of airlines, they don't have great financial statements to begin with. So overall, you might consider them to be in the middle of the pack with fair financial statements. The operating margin, as we mentioned earlier, is flat. Overall, I mean, the amount of debt they have that's due in 5 years stands at $2.2 billion. Their sales over the past 5 years increased on average of 3.5% per year. Their earnings per share are expected to increase over the next year. Their fuel expenses have been coming down. Their maintenance costs have been coming down, and they continue to have a focus on expanding into some of their current markets. And they've made some recent announcements about doing code sharing programs with South Africa, Asia, and the United Arab Emirates. So the company has some nice upside potential, and we're sure that's related to part of the outlook on their earnings, which makes this an attractive buying opportunity. So, just summarizing where we are so far, the financial statement quality we see is fair. The operating margin trend is flat. There are some positive activities going on inside the company. The price pattern trend we see is increasing. So we imagine the story about JetBlue and its potential is getting out there. And, overall, our market outlook is still bearish. I mean, over the past week, we're starting to see some chinks in the armor of overvalued stocks. But, JetBlue, we see as having some nice upside over the next year. The recent closing price, as mentioned right now, as of yesterday's close, is $8.98. And our model has a 12-month price target for JetBlue at $10.67. So that provides a 12-month upside potential of 18.8%. And that makes JetBlue definitely worth taking a look at and something you might want to consider adding to your portfolio. So that's what we have for this week. That's JetBlue. And on to our last slide. If you haven't already, please sign up for our weekly newsletter. You can get it by going to www.gmcstockpicks.com, and you'll be among the first to hear about these kinds of stock tips. And they're all driven by our proprietary algorithm that looks at over 3,500 stocks every week. We analyze and rank them for the best opportunities. So we're new on the block, and we tend to show everyone just how good we are. So go sign up for our newsletter and don't miss out. That's all we have for this week. Talk to you soon. Take care.